I've officially released my portfolio money management algorithms. I've talked about them a lot in my videos. And this is the members area. You can see there's an introduction and installation, strategy, equity peak, strategy, equity, and market position indicators. And these are the indicators we talk about in our video. How do you install those indicators, how they work, customizing the indicators so you can use them for custom solutions. This is an open code solution with open code examples, and how to export the static equity curve for back testing. And we go over back testing the static portfolio equity curve, and how to back test it, how to import the data. Then we go over the signal strength indicator. You can download the easy language, download the workspaces. Market position trader is also included, as well as the average entry price for the market position indicator. I'm going to show you the TradeStation workspaces for that. And there's also an add-on section. The only thing that needs to be added to this are the micro workspaces. And these are the workspaces that I'm about to go over in this video. This allows you, this is an add-on for the stock index portfolio. And if you have the stock index portfolio, you can get this at a discount. Contact us. And you can trade this with the stock index portfolio. Like the examples we're showing in this video, they can also be customized to trade any setup to any group of strategies in a portfolio. This has been a multi-year research project on how to find a way to trade a portfolio of strategies and have those strategies talk to each other to manage risk. And so I'm going to show you that, the workspace, the specific workspace setups. There is an unlimited combination of things you can do with the portfolio money management algorithms, but I'm going to show you the stock index portfolio 34 as an example. And so you can see the stock index portfolio 34 is these two workspaces on the left. 17 S&P strategies, 17 NASDAQ strategies. I've converted all the strategies to 1-minute charts because there is a end of bar delay when passing all this information to a new chart in another workspace or even in the same workspace. And so we wanted to reduce that delay to 1 minute or less. And each chart has an MM indicator, MM50 through MM66 for the S&P, and it is MM0 through MM16 for the NASDAQ. So we've inserted all these indicators in these workspaces, and that communicates the information for each strategy outside of this workspace so that it can be picked up in a workspace. And for example, the MM indicator looks back. It has the ability to look back at all the strategies, all 17 of the NASDAQ strategies, all 17 of the S&P strategies, 34 strategies, and sum up the intraday equity curve. And once you have a method for doing that, you can use that in your trading as well. You can trade the portfolio, the equity curve of the portfolio. When you have that information, like I said, there's an unlimited number of combinations you could look at, and this is just a small sample of what you could do in this video. We started this with the money management algorithms for individual trading systems. And now we have it so that it looks at multiple strategies instead of just one strategy. So this money management algorithm, portfolio money management algorithm indicator in this workspace includes the daily P&L for the stock index portfolio 34. It can be customized to any number of strategies or markets. This is the market position indicator. This tells you the net position of the NASDAQ strategies. Negative numbers mean short, positive numbers means long. This is the net position of the S&P strategies. Positive numbers are long, negative numbers are short. And today, for example, there was a net short position of 4 NASDAQ strategies. Typically, S&P strategies. 4 S&P strategies were short, and there was only a case where 2 were net long. 2 was the high, was the most long we were today, and -4 was the most short we were today on the S&P. Typically, the NASDAQ leads the way. The NASDAQ was -3 right here and +2 right here. That was the range on the net positions of the NASDAQ strategies today. And let's look at these additional. We have 5 workspaces, 2 for the E-mini S&P and 2 for the NASDAQ. and this includes the signal strength trader for the S&P and the NASDAQ. And you can see it took a trade today in the S&P. This is a very conservative setup. This one just looks at the S&P and looks at all 17 strategies, and it says if you are more than 2, greater than net long 2, then we'll take a position. If you're more than net short 2, then we'll take a short position. This one will take a net long position of 1 contract. It will use a $2,400 profit target, a $1,500 stop loss, no more than 1 trade per day. It trades entries between 10 a.m. and 3:30 p.m. Eastern Time and exits at 15:45. Very conservative approach to taking trades. And let's look at the equity curve for this. Brand new equity peaks today on this, and it's pretty neat to think that in the last 3 years of trading, a setup like this, trading just one NASDAQ, looking at 17 strategies but taking only 1 contract, would trade this well. And that is the power of using signal strength. It's similar to if you look at your phone, you have your indicator of your signal strength of the signal, and you have these bars. More signal is stronger signal, and so basically using that same concept, the more strategies that are net long, we want to trade it long, and the more strategies that are short, you trade it short. And so you can change those thresholds. Let's look at the market position trader, or the signal strength trader for the NASDAQ. Did not trade today. We have a rule in this one. All the rules are the same, except it requires greater than 3 strategies long to go long, and less than 3 strategies short. So you have to have more than 3 strategies on the short signals to go short. And this one's looking at the NASDAQ strategies, 17 NASDAQ strategies. Once you get more than 3 short, you go short. Once you get more than 3 long, you go long. Maximum of 1 trade per day, trading 1 contract between 10 a.m. and 15:30 p.m. Eastern Time. Exits at 15:45. And same profit target, 2,400. Stop loss at 1,500. Let's look at the performance summary for this. 128,640, 62.25 drawdown, 346 average trade profit, 1.96 profit factor. Here is the equity curve, and so this is a more conservative way to trade. If you could have, you could have a number of strategies. You could have 100 strategies, and you could say, you know what, I don't have enough capital to trade 100 strategies, or I don't want to take that much risk, but I'm going to use these, and once I'm long 10, I'll take a long signal. Once I'm short 10, I'll take a short signal. And you could do that for every 10. So you would only take no more than 10. You could say 10 every 10 contracts I'll add a contract. And so this is an open code solution that allows you to customize it. These are just specific examples for the stock index 34. Now I'm going to go over the market position trader. The market position trader is different than the signal strength trader. It takes all the same long and short trades. So the S&P market position trader looks at the 17 strategies here, and every time it increases by a long signal, it takes +1. It increases the number of longs by 1. Every time there's a short signal, it decreases the position by -1. And so you can see the long signals and then the short signals, and these were the net gains on the day. Shorting down here at the lows, very hard to do psychologically based on the current market environment. That hasn't been that successful, but we've kept these short trades in there, and because we anticipate this cycle, and it worked out well today on the short side. And this is how it works with the market position trader. The restriction here, though, is it takes all the same signals, but no more than 5. Maximum of 5. We set that up in the TradeStation workspace settings. And it uses a $3,000 position-based stop loss. That's not per contract. That's a position-based stop loss. It takes trades between 9:30 and 15:45 Eastern Time. It exits at 15:55. And once you're down more than $3,000, 3,000 or more, it won't take any new trades. So you could be down 2,900 on the day, and it could still take another trade, and then the stop loss would be 3,000. So you could end up down, about -6K on the day with this default setup. that can be adjusted. Those parameters can be adjusted as well. And so I like the opportunity to have 17 signals, and then maybe just decrease the number of net long or net short positions that you could trade. And let's look at the performance summary for this. For the S&P, this is what this looks like. It's been a little more choppy since the end of April, and recent equity peaks in August though. And so let's look at it. It works better on the NASDAQ. So if you look at the NASDAQ, here it is right at equity peaks. So we have the market position trader on the NASDAQ. Same rules, same exact rules, 9:30 to 15:45, exits at 15:55, a $3,000 position stop loss. Won't take any more signals after a $3,000. After it's down 3,000 on the day, won't take any new entries. And these are the trades on the day. Started taking long trades down in here because that was what the net position was. And you can see this is the short of the day. Let's look at the performance summary at equity peaks. And so same setup, just looking at this workspace instead. 17 NASDAQ strategies, not taking more than a net long or short 5 contract position. And then let's look at the market position with average entry price. This is an example of a custom solution where it looks at the average entry price, and so it won't take long positions unless we're above the average hypothetical entry price. So if it's been taking long trades, the new trade has to be above this average entry price to go long again. Short trades, if you've been taking short trades and the average entry price is here, you have to be below that average entry price to take another short trade. And so once you do that, that improves the strategy as well. Everything else is the same. Number of contracts, nice equity peaks. The results on this improve from around 2,800% to 3,900% because the drawdown goes from about 24,000 to 17,000. This number is 697 versus about 705. And this is the last 3 years. This is with slippage and commission, average trade profit of 180, profit factor of 1.5. So once again, this is the portfolio money management algorithms. It includes the separate members area of the money management algorithms. And so you get 2 members areas with this. And this is one of my favorite tools. It's multi-year development to trade this setup. And so you can contact us via Stock Index Portfolio, get a discount on this so you can get set up and trade one of these setups. If you prefer to customize your trading and want to trade one of the setups, you can do that with this portfolio money management algorithm setup.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.